the closing beat, everybody. Happy Thursday. How are you out there? Good. Good. Glad to hear it. Welcome to our show. We are financial advisors here at Jazz Wealth. Hope you'll keep us in mind. And by the way, to the hotel somewhere on the other side of the state that used our name as their password, thank you. Yeah, I don't know who that was, but I appreciate that. Very cool. It got me thinking, like, we should sponsor that stuff. Like, go to a hotel and be like, hey, call it Jazz Wealth. So when people log into the Wi-Fi, they have to use our name. Like, come on. It's clever, right? Don't steal that. I'm working on it. Anyways, tonight, well, we'll make this class here short because tonight we have Wine and Wealth for clients tonight, and we are going to go through the FedNow program and the digital dollar, the CBDC. Just going to go over it, share everything with you, because I see a lot of people, you want to go down the route of like, oh, they know too much about us, whatever. I just want to go through the differences, show you what they do, what they're implementing, and the rules that are being proposed, so you can maybe look at it yourself and decide whether you want to be, excited, worried, whatever you want to do. So we'll do that here in just a little bit. If you're one of our clients, log into the dojo. You'll see me pop up live, and we'll get to work and do our thing there. As far as the markets go today, it's the same as yesterday, right? It almost feels a little bit like summer, doesn't it? If you're familiar, the summertime in the market is very low volume, small range days, meaning the difference between highs and lows are very crunched, very limited. And it just kind of feels like summer. I don't know. If we take a look at the S&P here today, we're still stuck at that, what technical traders will use as known as a resistance area. We also don't really have a lot of economic catalysts coming out broad market-wise. We have a lot of earnings reports and everything, but for the moment, that's where we stand. And today, it was really the tech stocks that sort of put the lid on things, right? There was a gap down early this morning, and it tried to recover all of that, but the tech stocks didn't go along. You can actually see it second by second. Actually, let's do it. So we'll use the SPY. I'll show you an example here. So we'll go here to the 5-minute chart. This is the start of the day right in here. And so started off negative, rallied back all the way through lunch. All right, and you go, okay, cool. Everything's rallying back. The trouble is, if you look around, NVIDIA is a great example, one of the big players in the market there. It rallied first. So we got our gap down, big rally up, and then it started selling off before the market did. It was pulling the weight of the market down. That's a great example of a very much, the market is market cap weighted, or the S&P is market cap weighted. So when you have a stock like NVIDIA that before the market started rolling over, it rolled over, you go, uh-oh, that's not good. Let's take a look at the rest of them there. Semiconductors, okay, wow. Wait, that's the wrong one. There you go. Semiconductors, same thing. Oh, it started pulling back. Now, it tried to lift it later in the day, but look what it was. It was all these stocks that don't really move the market. They move the industry. Applied Materials, of course, with their earnings, Lam Research, anything in their little space, they did well. They're not big enough. They can't move the markets higher. You need NVIDIA. You need NVIDIA, which is the big name out there. It needs to be going up with the market. It was not doing that, unfortunately. And then when you look around at some of the other names today, like Tesla, of course, that has a big say in the S&P, Microsoft, which also has a big say in the S&P, nothing. So there wasn't that tech-driven rally, which tech, remember, accounts for more than 25% of the stock market, the S&P. So if it's not participating, all the other stocks can do is just go, hey, we're going higher. You guys, y'all want to go too? No? All right. Well, just bleed back down. That's exactly what happened today, and you could see it second by second. Really, really cool to see that. You could look around like the healthcare areas today. They did what they needed to do. Consumer staples, utilities, materials, they all gave it a shot, but there's such a little say in the market there. They're not a sector that can drive things forward, and sadly, that's what happened there. So you could see that full impact of a market cap weighted index, or maybe today you'd consider a little bit of a problem of a market cap weighted index actually not doing too well. So we'll see what tomorrow holds for us there. But does anybody really care if there's a little pullback here? We're sitting at highs. You got a little, 0.5% pullback, maybe, basically. And we don't mind. A little pullback here would do just the trick. I would argue a little bit better one would do the trick. All right, looking at the NASDAQ here, same thing, tech-driven index. So obviously tech needed to participate. It didn't do it today. So if you're looking around, you got nothing. There's just not really much to grab onto. Same thing with the Dow. So we don't need to draw this out or make it more than what it is. That's kind of what was going on around the world today, or around the U.S. today. Russell 2000, that's a small cap bank stock problem right there. That's all that's holding that sucker back. Everything else, for the most part, let me see, didn't do too bad. Value, Russell 2000 or small cap value stocks, they were on the weak end of the stick today, but you know, so be it. It's what it is. If you look around at some of the commodities, of course, you got oil pulling back just a little bit. Gold held up pretty good. I'll give you that. It held up pretty good today. And rates, after really just erasing all of that pullback in rates that you saw, okay, we finally got a little bit of a decline there. So interest rates moving lower ever so slightly, not enough for you to notice with the mortgage, or any kind of debt you're taking on. By the way, I see the comments, I see the questions about the changes in loans, right? What's going on out there with that and the disruption. I've just been kind of looking at the actual numbers there. If you're interested in looking, it is it's called loan level pricing. So I've just been comparing historical matrices against the current one to see what all the hubbub is about there. It does in fact look like, unfortunately, if you have good credit and you have a good down payment, and it really doesn't even matter. But if you have like a 20% down payment, unfortunately, if you're someone who is a little bit more financially stable, you're going to pay a little bit more percentage-wise than people that do not have the money and stuff. So there's arguments both ways there, but I just started looking into it, so I'm not going to make this whole class about that. But that is something there. That might be unfortunate. Anyways. Let's take a look here. Crude oil, by the way, I didn't hit this. Crude oil pulled back, gave back all of the OPEC cuts. Remember, the reason that spiked, OPEC said, we're going to cut production. And probably now people have had a chance to digest this and go, remember, we talked about it that day. It's 1% of the global output of oil. Yeah, it's not great, but it's 1%, right? Is it worth that big of a jump in oil? Probably not really. All right, sector-wise, if we look, over the last month, because of oil here, we've got a little bit of a pullback. I'm looking at energy now. So if we go sector by sector and just kind of do a quick check-in, see what's going on there. Energy still in the lead, 13% gains on the over the last month. And then you have real estate bringing up the last place spot. It's still positive over the last month, however, only at 3% gains there. One of the interesting things that you may have noticed, where did it go? Communication services, thanks to what's happened over here. There's your sector with the biggest change, right? So going back just a few weeks there, it was in third place. Now it's back down to fifth place. So a little bit of changing going on there. And I want to point out here real quick, just if you're looking in somewhere like the communication services area there, what is your most overbought and oversold stocks? Most overbought is Electronic Arts, EA is the ticker symbol, and Take-Two, which when I give you this list, I'm not saying that stock is overbought. I'm saying that stock is the second most overbought relative to the rest of the stocks. So it's easy to, in the sector, easy to see that EA Sports is in fact overbought. However, Take-Two, it's kind of in like a power trend, right? So it makes the list because of that, but I wouldn't call that really overbought. We don't need to go through all the sectors, I guess, but I want to touch on a couple of them here. In the healthcare space, looking around, Cigna is the second most oversold stock in that space. So if you like playing counter trend and saying, oh, this thing is going to, it's going to do something here at some point, you want to bet counter trend. That one stands out a little bit. If we go back to energy, knowing that that's still the leading sector over the last 30 days. In the energy space, there you go. Valero is the most oversold in the last 30 days, not generally, just over the last 30 days. So short-term pullbacks is what I'm trying to point out here, or short-term overextension. So if you're looking for that sort of thing, if you go on over to Chevron, this would be the second most overbought in that sector, and Pioneer would be the most overbought. So if you're thinking energy is going to continue to pull back and you want something extended or want to start building a watch list, well, there you go. Financials are a little different story here. Because they could, you could really tear this thing apart. Market Access is the most oversold stock, and that really just comes from the other day. The most overbought is AJ Gallagher. AJG is the ticker symbol there. They just call Gallagher now. Oh, okay. I didn't know that. Obviously on a tear, getting extended, maybe not something you want to chase. Very, very much strength here. Tell you what, little side tip. Anytime you see a wide range down day, like we saw yesterday, in the midst of a rally like this, that immediately gets erased the next day. They call it a bull 180, and you could probably guess why. It is a bullish reversal of what happened the day before. That's a pretty strong sign. So maybe that gets itself more extended there. If you're a technical analysis type person, then you're likely already seeing that stuff. And CBOE would be the second most overbought in the financial sector there. Yeah, that's all I got there. Consumer discretionary, one of the bigger movers over the last 5 days, but that's relative to everything else. So it's not like a meaningful, like crazy type of rally there. Just something I wanted to point out to you. We got a great class coming up here tonight on our Wine and Wealth, talking about the digital dollar and the FedNow program. And so we got the final pieces of that I'm putting together for you. I actually went through the proposed legislation and I just highlighted everything, right? So I could just show what sticks out. What do the algorithms that read through earnings? Well, what do they pick out of this legislation? What are common themes? What's going on here? And what's the real story directly from the legislation? So we'll take a look at that. Okay, let's move on. Tesla. They had their earnings there, had a chance to go through all of that. That was one of the bigger losers today. It didn't quite close down 10%, but we'll call it 10% there. So basically the discussion there with Tesla, there are three, I don't know what they call them. There are three categories of their business, right? So if we look in the pure car section, or if you're looking on their transcripts, you're going to see automotive there. Slight decline in sales, and of course margins. That's what everybody focused on there. Margins a little bit lower. They tried to make up for it. This is something sneaky that Tesla does. They tried to make up for it by selling off some of those regulatory credits that they have. They were normally selling around 125 million. They knew that they were going to come up short, so they sold off 521 million regulatory credits there to try to boost their numbers. Just wasn't enough there. One thing I found interesting, if you are someone who is interested in Tesla, the company there, in their like battery pack storage thing, they call it energy generation and storage. In that category there, 148% growth year over year. They deployed, 3,889 megawatt hours, which was up almost 400% year over year. They're killing it in this category here. It is the most amount of deployments. This is from Tesla themselves. They said this is the highest level of deployments that we have ever achieved thanks to the mega factory ramp up. Very cool. I just thought that was interesting. I enjoy reading through transcripts there, but that's what you have going on with Tesla. Not all good news, but so be it. And basically the argument is we're going to just pump out more cars, even though, so our margins will be lower. We'll make up the difference by making more cars because they are automating about everything that they do there, and they're doing it well. Discover. This is a good one to look at if you're looking at sort of middle America credit. Always a good one to look at because they sort of hold the wallets of average Joes and Joettes or whatever they're called. What do they normally say? Hey, you're an average Joe. But if you're saying a girl, you go, you're an average. There isn't one. No. Okay. Learn something. So Discover Financial here, sales were 10% higher there. And what's interesting is one of the things that you look at for them is charge-offs. So in other words, how many of us normal middle-class people or whatever don't pay and we just walk away from our credit card? That was estimated to be at 2.9%. It was only 2.7. So that, in addition to a bunch of other stuff inside of there, lets you know that that middle income sort of borrower or debtor is not doing horribly. They're still able to pay their bills, and that means that they can make a profit over there at old Discover Financial. Man, there's just so many that we could go through. I don't want to bore you here with all this. I unfortunately was up like all night just looking at all this stuff. It's earnings season. Constellation Brands, I'm sorry, Seagate Technologies there is going to pay the $300 million for shipping off, I think it was 1.3 billion, something like that, to Huawei. They weren't supposed to do that. So you pay a $300 million penalty for shipping 1.1 and 1.1 or 1.2 billion in product. Yeah, it's probably fine by them. Unfortunately, it means they won't make the profit that they thought they were going to. I don't know who they were thinking they were fooling there, but they did it. Zion Banks, one of the weaker of the smaller banks, not smaller, but relative to the Goldman Sachs of the world, that was one of the weaker ones that didn't have the best earnings there. So Zion Banks actually said our deposits have been and consistently remain down. And I believe they down by double digits. I can't remember the number, 15, 16%, somewhere in there. So that one out of all of them, you're like, oh, those guys are beating you. They're doing better. Taiwan Semiconductors going forward here said this is doing well. There is obviously a slowdown. There has been a slowdown. Semiconductors have been weak, but they said, first of all, they beat by 7% there. They said, we see an incremental upside thanks to AI. I found that fascinating. They're seeing the increase in production because of what's needed to process AI and all the fun things that we're doing out there with it. Also, they have, remember, I hear this argument a lot where people are like, China taking over Taiwan and stuff. That's trouble. That's trouble for us because, oh man, that's where our chips come from. No, man, they're rapidly building factories everywhere, including Arizona and other states here in the United States. But for the moment, yeah, you're right. We'd get a lot of chips from them. So tricky. Nonetheless, it looked good. Their financials were pretty good there. And they see further upside and, in fact, raised everything besides their sales total revenue guidance there. So good for them. Hey, you want to play a game? Tonight at 7, for those of you that are not clients, at 7 o'clock, Jazz After Dark. This is not my research. I'm going to tell you exactly where to get it and all this stuff so you can see the money that we spent on our research about financial literacy, the money that me and you, or our tax dollars, spent. To find out that most people cannot answer 3 kind of test questions. They're not general questions, but they're about financial literacy. And I'm going to read off these 3 questions to you tonight and see if you can answer them. Spoiler alert, I'm not going to give you the answer because I'm sort of speaking sarcastically here. You should be able to answer these questions, but holy cow. Like, don't overthink the questions either. Just try to answer. If it's for face value, they're not trick questions. It's just a trick question. If you can answer all 3 of them, you will be better off than 54% of your fellow question answering people. So best of luck to you. You know what I mean? You might want to brush up on your stuff. And these are not going to, you know how I talk. I tend to go off into the woods with things and sneaky tricks and things that you can do. These are not complicated questions, so good luck. Yeah. Financial literacy is, statistically, yes, it is a problem. It's a tough one, but the questions are interesting. First of all, and I'll just keep this in mind, all this money was spent over 20 years to get down to these 3 questions. For what? Like, okay, so they can't answer the question. Shouldn't we have spent the money on teaching the people like how to answer the questions? Ooh. Did I do a fin tips on these 3 questions a few years ago? No, I did questions. Those were mine. These are not going to be my questions. This is from countless hours and data and research. So it'd be fascinating. So I look forward to the comments. And I just know someone's going to go, you didn't give us the answers. Okay. Nope. Not going to give you the answer. That's funny. Hey, Nicholas says, what are your thoughts on CVM? CVM. What are we doing here? So you like the penny stock game. You're hoping for one of those, pops that you get. I see what happens there. I gotcha. It's not for me, but, I don't like, let's just pretend we don't know the name of this stock. We don't know a price. So I'm not going to pick on it because it's low value. The current performance this year means that nobody really knows what they want to do. It's just being popped up and down by probably some sort of news article or thread or something from somewhere. But there's no real substantial reason this stock needs to be worth more. And I don't have to guess that. I can see it, right? It's just going sideways. So for me, I would rather see it wake up and show me something. What's going to happen with the company that causes this stock to be worth more? But it's not for me. Nope, we're not even, Chris, we're not even going to get as complicated as dollar cost averaging. That'll be your hint. That will not be on the quiz tonight. Oh, man. 6 House members sold their bank. That's it? Just 6? Maybe they're following Warren Buffett. Yeah. You have 5 Fed members speaking. There were 6, I believe, today. There is 1 tomorrow, but that's not that's a prepared speech. That's not one where you'll get something that sounds odd. You didn't see any reports from them? Basically, it boils down to there's a 1/4 point rate hike coming. Soak it up, get used to it, and enjoy it. Did we not do the Dow with the guessing?
It's just your game with
Oh, just me? Let's see. Who's on the leaderboard? Here's your guess, the Dow. What do we got?
You got Pete up there in first.
Hey.
Yeah, it was close. There's a lot of guesses really close right there at the top and a little bit above that. So tomorrow matters for quite a few people.
Whoa. Yep. 33,775. Oh my gosh. You guys are, so there must have been a lot of people playing to get that many guesses so close. Okay. It's going to be an interesting Friday for you. Jeez. Okay. Good luck to you. I like it. Did you see your name? No. Just have to keep playing there. All right. Good luck on the 3 questions tonight. I really wish you well. If you need some help, you know where to find me. But hopefully you got this. You can do it. Focus. All right. We'll see you when we see you later on for the Jazz After Dark to test some of these questions. And, of course, Wine and Wealth tonight for clients. We're going to dive in, take a look at some of this. You enjoy the rest of your day. Thank you so much for watching.